XRP Black Swan warning. The reset is near. Hello guys, welcome back to our channel. Today in this video we are going to discuss what is the reset that everyone is talking about and what does it have to do with XRP. But before we begin, make sure to give this video a big thumbs up. And if you are new to this channel, don't forget to subscribe before leaving. Also hit that bell icon so that you can get notified whenever we will upload a new video in this channel. For now, let's get back to the video straight away. Ripple XRP is starting on a bearish note after 2 consecutive days of gains, after gaining almost 10% since Monday. At the time of writing, XRP/USD is trading at around $1.45, having reversed almost all of its gains and falling by more than 5% in the past 24 hours. The XRP token has been under pressure on account of the ongoing lawsuit between the SEC and Ripple.
You want to win an iPhone 12, maybe a MacBook Pro? How about $500 cash? You decide. All you have to do is comment the secret hidden message somewhere in this video, and leave a like on this video and subscribe to the channel so we can keep affording these giveaways.
With the SEC recently filing an objection against the company's co-founders who want the court to dismiss the case against them. In the latest developments surrounding the ongoing proceedings, the SEC has also filed an objection filed by holders of this cryptocurrency to intervene, stating that they would be too partial and could inappropriately expand the issues covered in the lawsuit. The bearish moves in Ripple on Wednesday could have been triggered by the overall downbeat sentiment in the crypto market after Bitcoin fell below the key $40,000 level. The decline in BTC prices has affected most of the leading cryptocurrencies, and the effect has been felt in XRP/USD as well. Even as the legal action drags on and keeps the future uncertain for XRP, the cryptocurrency faces some support from increased activity among whales holding Ripple. Data published by Whale Alert reveals that an XRP wallet moved around $93 million worth of Ripple's tokens into an unknown wallet on Tuesday. This move came one day after another similar move that saw $38 million worth of the cryptocurrency being transferred from a crypto exchange into a wallet. The New York Times has long been viewed as the newspaper of record in the United States. A reporter at the publication, Nathaniel Popper, recently cited a scathing article about Ripple by the Financial Times, titled "With $16 billion in cryptocurrency, Ripple attempts a reset." Popper delved into the relationship between Ripple and one of its major cross-border payments partner, Santander Bank. He claimed that the bank is still wary about using Ripple's XRP digital currency. Responding to Popper, Ripple CEO Brad Garlinghouse has made it clear that the company is not looking to reset its strategy. In the August 12 article by FT's West Coast editor Richard Waters, the journalist posited that XRP has failed to gain popularity amongst banks as an alternative payment system. He cites Santander Bank, which has been hesitant to use the XRP currency in its global payment network despite using Ripple's software. The bank has argued that XRP is currently not being traded in sufficient markets to be able to support its banking needs. Additionally, MoneyGram receives a significant amount of money from Ripple to use XRP for its payments. This approach by Ripple has not been received well by most people. Popper, for instance, accused Brad Garlinghouse of misleading investors with promises that multiple banks would be utilizing XRP in the near future. According to him, investors who were swayed by Garlinghouse's words and invested in the cryptocurrency have now lost circa 90% of their initial investment. In response to the criticism by the New York Times journalist Popper, Brad Garlinghouse defended the firm's current business model in a series of tweets on August 14. Garlinghouse maintained that using XRP cryptocurrency to solve the $10 trillion cross-border payments problem is already working. The Ripple boss then shared data regarding the on-demand liquidity (ODL) solution which leverages XRP cryptocurrency. Since its launch, the ODL has accounted for over $2 billion in transactions. Moreover, its volume has grown 11 times on a year-over-year basis. He also points out the more than a dozen customers including MoneyGram, Golance, FlashFX, Asimo that are already using the on-demand liquidity service. In conclusion, Garlinghouse also called attention to the fact that Popper had gotten his Twitter handle wrong. The fourth quarter of 2020, Q4, was a pivotal time for cryptocurrencies, although Ripple didn't benefit much from it. Strong bullish sentiment dominated the asset class as coronavirus, COVID-19, and political uncertainties began to reside, which turned even more bullish in 2021, until mid-May. With the new president in the US, the final conclusion to the Brexit saga, and the global economic reopening drove optimism across many asset classes. Long gone was the COVID-19 panic selling of March 2020, in its place was recovery-fueled optimism. Q4 2020 and Q1 2021 proved to be a bullish period for the leading cryptos. Among the biggest winners were Bitcoin, BTC, and Ethereum, ETH. both establishing new all-time record highs. Unfortunately, Ripple, XRP, didn't exhibit the epic bidding that many other cryptos did, despite a couple of attempts to join the crypto rally. In Q2 of 2021, XRP/USD finally joined the rally, nearly quadrupling in value in a couple of weeks, before the reversal and the crash in May and the second leg of decline in June. But the decline seems to have stopped, and surely cryptocurrencies, including Ripple coin, will resume the bullish trend soon. Similar to other cryptocurrencies, the XRP market is driven by a diverse collection of underpinnings. Rumors, government regulation, mainstream adoption, and corporate health are four common market drivers that XRP shares with the rest of the asset class. However, XRP is an exceedingly unique product. Launched in 2012, Ripple has had a long-standing history as being one of the leading coins by market capitalization. Featuring a mammoth float of 100 billion units and an ultra-low price, XRP is thought of by many to be the silver of cryptocurrencies. If you can't afford BTC or ETH, then XRP appears to be a suitable option. Since inception, XRP pricing has periodically fallen out of step with the leading cryptocurrencies. One of the main reasons for this is that XRP is only one of several assets promoted by parent company Ripple. In addition, XRP is not mined by the public like BTC, ETH, or Litecoin, LTC. Back in 2012, Ripple minted 100 billion XRP, which were to be periodically sold to the public by Ripple. As of 2021, only about 45 billion are in circulation. The other 55 billion are being held by Ripple for future dissemination. This is an extremely controversial aspect of XRP pricing. Theoretically, Ripple can dump large blocks of XRP on the market as deemed necessary. Given this functionality, there is a question of whether or not the price of XRP can be directly manipulated by its parent company. The value of cryptocurrencies with respect to supply and demand is an interesting study. In fact, experts argue that the tight supplies of BTC are the primary reason for its steep 2020-21 rally from $3,500 to $50,000. As of January 2020, there were about 18.5 million BTC in circulation, with a maximum supply of 21 million. Basically, BTC's inherent scarcity prompted a major spike in value as demand increased. The supply/demand dichotomy for XRP is almost 180 degrees from BTC. There is a ton of XRP available, and even more held in reserve. The Ripple coins in circulation and the supply/demand relationship are a major factor for Ripple, but the overall cryptocurrency market sentiment will be impacting any future forecasts of the coin's value. The adoption by larger companies and institutions is also a major factor. Ripple is making progress in this front, with Ripple Labs subsidiary RippleNet assisting SBI Remit, SBI's subsidiary, in building a cheap and frictionless remittance network in Japan. How will supply and demand influence XRP prices? No matter if you're trading stocks, commodities, currencies, or crypto, supply and demand is a key driver of valuations. The general rule is this: if supplies are low and demand is high, prices rise. Beginning in mid-2020 through February 2021, a robust public and institutional demand for cryptos drove prices to record highs. XRP was an outlier. Why? The answer lies in the supply-side relationship between XRP, its parent company Ripple, and the trading public. Before understanding the XRP supply/demand curve, it's important to take a look at Ripple's methodology toward coin management. As of February 2021, Ripple Incorporated held approximately 6.3 billion XRP, while placing another 48 billion into a cryptographically secured escrow account. That left about 45.6 billion XRP of the total 100 billion in public circulation. In effect, Ripple controlled roughly 55 billion XRP, while the public held 45 billion, a 55/45 majority split. As of mid-February 2021, XRP was priced at 60 cents, making the entire market cap roughly $60 billion. Ripple directly owned $33 billion. It stands to reason that when Ripple decides to release more XRP into circulation, prices will be significantly impacted. To increase the circulating supply of XRP, Ripple must sell coins to buyers. Here's a look at Ripple's official sales policy. Since 2012, Ripple has methodically sold XRP and used it to incentivize market maker activity to increase XRP liquidity and strengthen the overall health of the XRP markets. In other words, Ripple sells XRP to ensure operational and pricing efficiency. So, how will Ripple manage this moving forward? That is a tricky question. During the second half of 2020, Ripple became increasingly active in the XRP markets. For Q3 2020, July 1st to September 30th, Ripple sold $81.39 million worth of XRP and purchased $45.55 million for a net of $35.84 million. Q4, October 1st to December 30th, proved even more aggressive. For Q4, Ripple sold $111.12 million worth of XRP, purchased $34.85 million, for a net of $76.27 million. The conclusion: as prices rose, Ripple sold more XRP. For Q3 2020, XRP was range-bound between 17 cents and 25 cents. Q4 saw this range extend north, becoming established between 25 cents and 75 cents. The price action of Q4 is worth a closer look. To begin October, XRP traded in the vicinity of 23 cents. Mid-November brought a spike high of 76 cents. As December concluded, prices fell to 21 cents. Basically, Ripple began selling XRP, traders followed suit, and prices moved quickly lower. When considering the massive supply of XRP that Ripple directly controls, new coin sales are an extremely bearish market driver. In the event that Ripple needs an injection of capital, or is forced to disperse escrowed coins, XRP prices will suffer. Until XRP reserves are depleted and the coins in circulation become the majority of aggregate supply, Ripple XRP sales will represent a formidable downside risk. Conversely, if Ripple ceases XRP sales for an extended period of time, prices are likely to stabilize or move higher. That's it for today, guys. We will see you next time. Until then, goodbye.